Hello everybody, good evening. Welcome to Office Adda 247. Today is the day 23 of IE IFS RAFTAAR series and we will be discussing the numericals based on unit number 19. 2 or 3 numericals will be there, plus some questions from unit 19 will be there directly related to the theory part. Theory in the sense the components which are being discussed in the union budget. All those we will be discussing via some questions and we will be explaining to you that how things will pan out when we discuss the union budget. So let's get started. First of all, the question is in front of you. A state government's financial report is provided, and therein you are given that revenue receipts pertains to 50,000 crores, capital receipt 20,000 crores, and total receipt is 75,000 crores. Now the point here is that what will be the drawdown of the cash balance that is being asked in the question. When we talk about the cash balance, it is nothing but the surplus funds apart from the receipts which you will be receiving as a government, whether it's the state government or it's the central government. Both will have certain balance in their accounts, in their, you can say, revenue generation accounts, so that they can do the day-to-day activities. They can lend somebody if required. They can do the expenditure at their own will. They are not only dependent on the revenue receipts of a particular year. Fine. From the previous year, there must be some cash balance in their account. Okay, so you have to calculate that only. So cash balance of the state government will be what when these three are provided to you in the question. Revenue receipt, capital receipt, total receipt, and you have to calculate the cash balance. The answer will be what? Do let me know in the chat section that what will be the answer, because see, if you guys will be telling me the answers again and again and again, then I'll be also in a better position to judge that whether I have to explain it to you to one extent or the another, what all I should explain, then only the session will be fruitful. So the correct answer here is what? Your 5,000 crore. How? Simple formula. Total receipt is equal to what? Revenue receipt plus capital receipt plus the cash balance which you have in your kitty. Be it the state government, be the union government, every government has this particular cash balance. So total receipt will be what? The receipts of revenue account, receipts of capital account plus the cash balance. All you have to do is equate in the equation and you will get the answer as 50,000 crore. This is to be calculated. Total receipt is what? 75,000 crore minus the revenue receipt will go there, sign will change minus, capital receipt go there on the left hand side, sign will get again changed to minus. Revenue receipt is 50,000 crores and capital receipt is what? 20,000 crore. So once you equate all these components, all these numeric values in the formula, you will get the answer as 5,000 crore for your drawdown of cash balance. Okay, option A will be the right answer. Next, Indian government's financial data is provided to you for a particular fiscal year, not required as such. The fiscal year is not required. We only have to analyze the data. So whatever fiscal year you want to imagine, you can. It shows that the following figures are there in the financial data of our country. Gross tax revenue is 25 lakh crore. NCCD transferred to the National Calamity Contingency Fund will be 50,000 crore and the state's share of taxes is 10 lakh crore. So one thing which you must know is that whenever revenue is generated by the government, the central government per se, it will keep certain funds aside for the National Calamity Fund. Any natural disaster which will happen, it will happen suddenly, and if you do not have the funds to manage the destruction which is being caused by that natural disaster, your economy will plummet. So to avoid that thing, the government will do what? Once the revenue is generated, it will have a chunk of that amount and leave it as a particular share which will be not utilized for any other activity but the natural calamity. Along with that, some funds for state share will also be removed from the revenue generated. Why? Because Finance Commission has told us that devolution of funds must be there. Whatever revenue is being generated by the central government, the states will have a certain share in that as well. So the state's share will be sidelined, the NCCD funds will be sidelined, and your gross revenue will be calculated. So what will be the net revenue? Net tax revenue will be gross minus NCCD minus state's share of taxes. So correct answer will be what? Option B, that is 14,50,000 crores. Fine, explanation is this: net tax revenue is equal to gross tax revenue minus NCCD transfer to National Calamity Fund, Natural Calamity Fund minus state's share. And once you will equate the data which is provided to you, like 25 lakh crore minus 50,000 crore minus 10 lakh crore, you will get the answer as 14,50,000 crores. Okay, now some theoretical question. Let's see some theoretical question also. Which among the following is the best definition of primary deficit? What is primary deficit? What do we mean by primary deficit? That we must know. Okay, primary deficit. What is the primary deficit? It is nothing but a form of fiscal deficit only, fine, wherein you subtract something. And what is that something? It is being asked in the question. That is why I am not telling you. Is it the excess of revenue expenditure over revenue receipts, or it is the excess of capital expenditure over capital receipts, or it is the revenue deficit minus grants in aid, or it is the difference between fiscal deficit and interest payments? So yes, option D is the right answer. Well done everyone. D says that difference between fiscal deficit and interest payments. So what is this fiscal deficit? We will see in the next question. Option D for this question is the right answer. Fine. You have to calculate the borrowings by the Indian government if the total expenditure is 100 crores, total revenue is 50 crores, and fiscal deficit stands at 70 crores. So fiscal deficit, the basic formula everybody knows, fine, basic formula which you can decipher from the term itself. Fiscal deficit, your expenditure is more than the revenue, therefore a deficit will be created. Okay, and once you subtract the expenditure from your revenue, you will get the fiscal deficit. But in revenue component, you already have some borrowings. Okay, borrowings are already included, so you have to subtract the borrowings. So expenditure minus this part will give you the fiscal deficit, that is FD. Okay, now you have to just equate the equation. Here it is what? 70 expenditure, it is given 100 minus revenue 50 minus plus, that is borrowings. Here you will get what? 50. So borrowings will be 70 minus this 50, answer will be 20 crores. So option B will be the right answer here. Okay, this is the formula: total expenditure minus total revenue, excluding the borrowings. From revenue only you will subtract the borrowings because it has already been included once. So again if you will include, it will create duplicacy. Okay, which of the following form, and yes, one primary deficit which was there in the previous question, it is the difference between your fiscal deficit and interest payments. Okay, what is revenue deficit? Revenue deficit is very simple. There are two types of accounts in budget: revenue account, capital account. So revenue deficit only talks about the deficit which is created in the revenue account, which is a short term account, fine, less than 1 year. So it is not giving us the complete picture of the economy. That is why Government of India no longer takes it seriously and it focuses only on the fiscal deficit. Okay, which of the following form a part of capital expenditure in Union Budget of India? Capital expenditure. Just imagine, just visualize the term. You are spending something, fine. So securities against small savings, state provident funds, internal debt and public account, fine. Will they form the part of some expenditure or is this some revenue? The three options. The correct answer for this particular question is option D, none of the above, because these are the debt receipts. Okay, these are the capital receipts, and under capital receipts, debt receipts. Non-debt are recoveries of loans and advances and disinvestment receipts. Debt receipts, securities against small savings, state provident fund, internal debt and public account. So they are not expenditure, they are under the head of receipts. Fine. Non-plan expenditure, the capital expenditure are defense, other non-plan capital outlay, loans to public enterprises, states, UTs and your foreign governments. These are the capital expenditure. And planned expenditure, if you talk about the capital expenditure in planned expenditure, central plan and central assistance for state and UTs. You will see that revenue expenditure is also having both the components. Then what is the difference? Difference in the duration. The duration for revenue expenditure will be less than 1 year. But here in capital expenditure, it will be more than 1 year, and mostly you will see more than 5 years. Okay. So a bonus formula for all of you, total expenditure is what? Total non-plan plus total plan expenditure. Fine. Dividends and profits, they form a part of dash in a union budget process. Dividends and profits, whether they are some expenditure or they are some revenue, which type of revenue? If revenue, then which type of revenue? If expenditure, then which type of expenditure? Short-term expenditure, then you can say that it is from the revenue receipts or revenue expenditure. Long-term expenditure, capital expenditure, which will fit here. So it will be what? Total non-tax revenue. Total non-tax revenue, dividend and profit. We have just seen in the previous question, the explanation of previous question. Dividend and profit, total non-tax revenue under the head of receipts. Okay. Receipts are again two types, revenue receipts and another one is what? The total receipts, revenue receipts and your capital receipts. Okay. Now this question can be asked in the actual exam because it talks about a very fundamental thing. A very fundamental thing is being asked here. If you will analyze, if you will read between the lines, you will come to know what is the fundamental thing. Which among the following are the examples of non-debt capital receipts of Indian government? Non-debt capital receipts. Non-debt capital receipts. You are receiving certain amount over a period of time, fine. You are not receiving it today only. After 5 years, you will be receiving that amount in your wallet, in your budget. But it is what? Non-debt creating. You are not supposed to pay any interest. No debt has been created in that particular transaction. Fine. So it will be what? It will be certain recovery. You are recovering something. You have provided Sri Lanka with the funds during the economic crisis, and now Sri Lanka is paying your funds back along with some interest payments. So it will be what? Debt creating or non-debt creating? It will be non-debt creating. Next, it will be what? The disinvestment receipts. Here the fourth point, it will be what? You are privatizing certain enterprise. The whole corpus of disinvestment will be there with you only. You need not to pay anything else to the private companies, to the enterprises, and you have just privatized those companies. So disinvestment receipts will also be there in the non-debt creating. But what about market borrowing and securities against small savings? Here you have to repay. Fine, you have to repay along with certain rate of interest or certain obligation will be assigned to you. Option C will be the right answer. Okay. Fine. Capital receipt, you can see for yourself. Recoveries of loans and advances and disinvestment receipt. Only these two are under the non-debt receipt. All the others are under the debt receipts. Fine. Which of the following is not a tax revenue? Which of the following is not a tax revenue of central government? Not. So you can see that which of the following is a non-tax revenue. From this particular statement, you can also analyze that you have to select what? Which of the following is not a tax revenue means non-tax revenue is being asked. Non-tax revenue. So compensation cess, GST, it is a tax revenue. Then corporation tax, union excise duty. These are also what? These are tax revenue only. Non-tax will be what? Receipts of union territories. Now one component is there, okay, this is option D is the right answer. One component is there in the tax revenue, which says taxes of union territories. So will it be a part of tax revenue? Yes. But when I talk about non-tax revenue, then receipts of UTs will be the right answer. Here you can say the tax revenue comprise of all the taxes starting from corporation tax, income tax, GST, IGST, wealth tax, customs, service tax, everything along with taxes of the UTs. But when I talk about the total non-tax revenue includes union territories are a part of that, but their receipts, not the taxes. Fine. So now let's move on to the money supply question. Money supply, your money supply and inflation chapter. One bonus question you can say that apart from union budget, one numerical from money supply, we should also think of some other numericals also, because most probably chances are there that one question will be asked from this particular chapter. So money supply M1, M3 is being asked using this data. So RBI provides the following data as of a specific date in crores, INR crores, rupees crores. First data point is currency with public. Currency with public is 25 lakh crore. Okay. Currency held by the public is 25 lakh crore. Then you have demand deposits with banks, 12 lakh crore. Time deposits with banks, 55 lakh crore. Other deposits with RBI, 40,000 crores. So what is being asked? M1 and M3 respectively. So M1 is what? It is a narrow money, your narrow money. M3 is what? Broad money. Narrow money includes what? It will include the currency with public, demand deposit, and your other deposits with RBI. Okay. And once I'll be adding up the time deposit in your M1, you will get what? You will get the M3, that is the broad money. Okay. So simple. If you know the formula, if you know the concept, if you have understood the concept, questions are very, very easy. You have to only use the calculator, which is allowed. Fine. Scientific calculator is not allowed, but simple calculator is allowed. Just use the calculator and save time. Okay. So option A will be the right answer here. Fine. How? Here you can see only you have to equate. The concept is clear to us. We only have to equate. We only have to use the numeric values of various components which are being mentioned in the money supply. So M1 is what? Narrow supply, narrow money supply, and M3 is the broad money supply. M1 comprises of currency with public, demand deposit, and other deposits. Demand deposit with the banks, other deposit with the RBI. M3, the currency with public, demand deposit plus time deposit is also added. Okay. So for this question, 37,40,000 crore will be the M1 and M3 will be 92,40,000 crores. Okay. So this was it for this particular session. I hope that you liked the questions. If you are looking for practicing more such questions, I will highly recommend you to join us in the mini marathons which we are conducting. In the last Sunday also we conducted mini marathon for all the 4 subjects of JAIIB, and in this on this Sunday also we will be conducting on a similar pattern. All the 4 marathon classes of all the 4 subjects will be there. We will be starting with IE IFS module B, and then we will be moving on to other subjects with module B only. So we'll be targeting module B in this particular session, which will be held on your Sunday. Okay, Sunday you will be having the session. Let me just give you the overview that how the session will be there. So last session, I hope that most of you have attended, because see, those sessions which we conducted, the 4 sessions, they were for you only, fine, to judge your you can say level of preparation, that what is the level of preparation and how we will be able to crack this exam with that particular level of preparation. Fine. So here you can see the Super Sunday alert has been issued, and mini marathon will be conducted from 7 AM onwards. 7 AM I'll be taking up the IIFS mini marathon, and then Vishal sir will be taking up the RBWM mini marathon. Fine. Wait a second. Yes. Vishal sir will be taking up the RBWM mini marathon 9 a.m. Then Aarti ma'am will be taking up the AFM mini marathon 11 a.m. and Aman ma'am will be taking up the PPB mini marathon at 1 p.m. So save the date, that is 13th April, and save the timings as well, because here we will be discussing the exam relevant questions, what type of question will be asked, how you need to interpret the options, everything will be discussed here. Most important topics also you can extract from these particular sessions. So do not forget to join them. Show your participation at the maximum level which you can. Okay, so this was it for the session. If you like the content which we are providing here, you can just like the video and share the video with your colleagues, friends, and all those people who want or who have a keen interest in the Indian economy. Okay, so goodbye everyone, take care.